Dan Ives says this over at Wedbush: bringing Ellison and others on board to help fund the Twitter deal is a smart poker move that will be well received by both Tesla and Twitter shareholders. Dan Ives joins us right now. Dan, can we start there? Why both Tesla and Twitter shareholders?
Well, for Tesla, if you look, Musk, in terms of leveraging his share in the overall ownership stake of Twitter, basically being financed on Tesla stock, taking less of a burden from Musk is a positive in terms of what he's ultimately down the road going to have to put up from Tesla stock. We also think the equity financing, he'll bring in partners, at least for probably 30 to 40% of that. So that's bullish because that's ultimately been about $100 per share overhang in Tesla stock. In terms of Twitter, because at this point, I would say 75 to 80% chance a deal is going to get done. Now, probably 95% plus, because you bring in these partners, Ellison, Fidelity, Sequoia, and others. I think this just shows this was the missing piece in the puzzle for the street.
So you're highly confident he's got the financing now, Dan. What's the 10% that's left? What's the 10% of doubt you've got?
Look, I think you see just a little arb spread here. It's just there's going to be twists and turns from a regulatory perspective. I mean, obviously, this is going to get a big focus both in the Beltway as well as Brussels. There is some, there's only about $1 billion breakup fee, for him to walk away. It's small, but I do believe relative to today versus yesterday after this news, it feels more like this deal is on a glide path to get done. And I think it also just shows from a Tesla perspective, it's not just Musk trying to fix Twitter himself. I mean, you're going to have Ellison, Sequoia, and obviously Brookfield, Fidelity, and all these others. They'll have their teams, even though it's passive, called strategically help. Yeah. Because again, for Musk, the easy part was buying Twitter. Hard part's going to be fixing it.
Dan, this is the financing. Let's talk about the fixing and the management. CNBC reporting this morning that Elon Musk is expected to be the temporary Twitter CEO after and if this deal closes. Dan, what do you make of that?
Look, I think it's one that there was a good chance this was going to happen. I ultimately do believe that he ultimately moves more to a chairman role than not as a permanent CEO. I think obviously the fact that he's putting up basically 20% of his net worth, to buy Twitter, I mean, it's not a shock, but it also goes back to, we saw with Dorsey and we've seen with others, Musk is the heart and lung of Tesla. So any distraction for him, I mean, that's going to be ultimately micro-analyzed in terms of just taking an eye off the ball. I believe he'll be able to manage it, but clearly you don't want to see him as a permanent CEO of Twitter.
Well, let's talk about whether he would be. And if you've got a decent picture of what he's going to do with this name, it's been widely reported, and most people speculated that once it went private, it wouldn't be too long before it became public again. Dan, have you got a decent idea for the trajectory of how you think this plays out, the timeline for it?
Look, I think this is going to be an Everest-like uphill battle to fix Twitter. I mean, remember, relative to also what he's paying, no one's going to get within, a football field of that price relative to the 5420. He's going to have to transform. It's going to take years, 2 to 3 years, subscription model, the advertising, the algorithms, the free speech. That's going to continue to be a tightrope. Social media arms race, Twitter has basically been in the right lane, missing out, where others pass them in the left lane. So I think this is going to be uphill battle. I would not expect this to get back out in the public markets for a number of years.
Dan, Taylor Riggs mentioned earlier, and she's right, that Elon Musk has proven that he can manage several different companies. He's had success with many of them. Tesla, of course, first and foremost. Can you tell me, as someone who covers Tesla, when all of this starts to become a little bit more problematic for you? Are we there yet? If we're not, what would it take?
Yeah, we're not there yet. And I think Musk, the golden child for Musk continues to be Tesla. But between the build outs of the Giga factories in Berlin and Austin, and of course, what's happened in China, potentially a second factor there. You got autonomous FSD, Cybertruck. I mean, there's a lot on the plate in terms of Tesla. John, I would say if we go into the next, call it 12, 18 months, and you start to maybe see some hiccups, tripping over the shoelaces type things that happen at Tesla, that's where you start to get concerned. But as we know, I mean, he's had the golden touch. It's hard to ultimately bet against him. And ultimately for Twitter, I mean, this has been a treadmill stock for the last decade. So clearly he's going to improve it right off the bat. But it goes back to the easy part was buying it, the hard part is for me fixing Twitter. It's a whole different animal than the technology companies of Tesla, SpaceX.